Hi, how is everybody doing today? This is Rich here on behalf of Rich TV Live with our very special guest. It is John, the CEO of Delta 9 Cannabis. How you doing today, John?
I'm very well, Rich. Thank you for having me.
Thank you for being here. How you doing today? Other than the fact that the market is blowing up and cannabis stocks are starting to do good again, feeling good about that?
I will say I'm as well as I can be for the fact that we're in a global health crisis. But no, otherwise, you know what, if I wasn't doing an interview, I would have my mask on here at the office. But
Wow.
otherwise, I'm doing quite well.
You honestly wear a mask?
We've sent home about 70, 80% of our head office staff are working remote.
Wow.
Those who are still coming in are putting masks on at the door. So
Wow.
like everyone else, we're taking precautions.
That's incredible. Now, we have some people watching and they're excited to learn more about Delta 9. So, why don't we go through some questions that I have for you and then we can go through some of the industry topics that we can talk about and maybe go through some questions. Is that okay?
Sounds perfect.
Fantastic. So, Delta 9 recently released your Q4 and year end 2019 financial results. We've seen from you guys over the past few quarters, the numbers are very positive. I'd like to do a deep dive on the financials, but I'm wondering if you can start with a summary of some of your operating milestones the company would highlight over 2019.
Yeah, absolutely. And I'll run through some of the operational components. Obviously, do a deep dive through the financials with you, and then I know people are wanting to know what's going on with the current COVID-19 situation, so we can touch on that more towards the end. But from an operating standpoint, I mean, 2019 was a year of many milestones for Delta 9. A lot of our focus on the cultivation side. So just to remind listeners, what's really different about us is our grow pods. You'll see a mural of the pods in our production facility behind me. These modular grow pods are the basis for Delta 9's cultivation platform. It gives us a very high level of control over the growing environment, allows us to produce or focus on high quality flower. Obviously, feel that that's going to position us very well in terms of seeing less margin compression and things like that as the industry expands on the cultivation side. So a lot of our focus over 2019 was increasing our productive capacity. The end of 2018, we had 154 of these modular grow pods under license by Health Canada. Our annualized capacity was about 4,200 kilos per year. By the end of year 2019, we were now at 297 of these grow pods. So we had increased our capacity under license by Health Canada to about 8,500 kilos per year. So almost 100% growth year over year just in our productive capacity and significant investments in CapEx. Now, we would highlight as well that as at the end of the year, those 297 pods have been fully built, fully licensed. So there is no additional CapEx required from Delta 9 in terms of achieving that 8,500 kilos per year. Moving forward on our phase 2 expansion, we are pending a license amendment from Health Canada to bring online the last part of our current Health Canada licensed facility, and that's our purpose-built processing center. It's a fully automated packaging, labeling, induction sealing, tax stamping, case packing facility. It's state-of-the-art facility. Will allow us to process and bottle up to 25,000 kilos per year of dried cannabis flower, blended flower, pre-rolls, etc. So obviously will add significant efficiencies for us as we really ramp up production into Q1 and Q2 this year. Again, with a focus on those high quality products, but those investments in automation, I think will be significant in terms of driving cost efficiencies for Delta 9 into this year. Now, on our portfolio of cannabis products, again, a lot of the focus for us over the third, fourth quarter into Q1 this year has been pivoting our production in-house to focus on the high potency, high quality flower strains. We will start to see Q1, I think, a significant improvement in our wholesale sales from high quality flower, an increase in our average selling price, and I'll touch on some of the KPIs in a moment. We're increasing our capacity for pre-rolls and have been over 2019. And on 2.0 products, we launched our first Cannabis 2.0 product. It's a dried sift cannabis, or keef, as it's referred to by many in the market. At the end of last year, that's now selling across all of our provincial markets, where we see very premium pricing for a very premium high THC product. Our next step in terms of 2.0 products will be vaporizers, both the disposables and the 510 cartridges, which we're planning to launch in partnership with Westleaf Labs at some point in the second quarter of this year. We also signed in the first quarter of this year, subsequent to the end of the reporting period, a commercial rights agreement with Otcqx Cannabis, an extension of our existing partnership with them, to be distributing their 2.0 products, marketing those in-store through our in-store distribution channels here in Manitoba and ultimately across Western Canada. From a distribution standpoint, over 2019, Delta 9 took an incremental approach, as we've chatted about. We increased our distribution, or our access to distribution markets, throughout the year as our production capacity increased. We've now secured distribution contracts in Manitoba, Saskatchewan, Alberta, and BC. We've completed our push west. We're now in discussions with Ontario, a number of the eastern provinces, in terms of expanding our push east, again, as our production capacity increases into the first 2 quarters of this year. So, look to reiterate for investors that as much as we are a regionally focused producer with a single site here in Manitoba, that we do envision ourselves as a national distributor and a national brand of cannabis products. Now, in vertical integration, cannabis retail sales, obviously we feel there's a huge benefit to vertically integrating ourselves into retail, giving us control over the direct-to-consumer sales force, obviously recapturing that retail sales margin up and down the value chain. The data collection and analytics that we're seeing from retail is a huge benefit for us. We get to use the data that we are collecting in retail, essentially to guide us as a manufacturer in terms of what products are we producing, what are we manufacturing, where are we looking to focus our investment dollars moving forward in the cannabis space. Over the year 2019, we increased our store footprint from 1 to 4 operating stores in the province of Manitoba. We are completed now on our 5th store in the province of Manitoba. We are just pending a license from the government of Manitoba to increase our store count again in Manitoba. And we are pending the issuance of a license on 2 stores in the province of Alberta as a part of our planned transaction to acquire 2 stores in Calgary and Grand Prairie. So looking forward, we do continue to reiterate that we envision a chain of Delta 9 branded retail stores across Western Canada, really in any province that's going to allow for vertical integration into the retail segment for ourselves as a producer. That'll be a large part of the company's expansion plans into 2020 and 21, is increasing that footprint of retail stores. And on the B2B side of our business, obviously significant milestones for us over this year. We announced early January that over 2019, we had delivered 89 of our modular grow pods to third parties. Our B2B revenues over last year were over 6 million. That's up from about 900,000 in 2018. So significant growth in our B2B segment. Really good relationships that we're developing with a lot of these licensed and pre-licensed producers through this B2B segment, as we really establish ourselves as a provider of products and services for other companies looking to participate in the cannabis space. It gives investors, I think, exposure to the picks and shovels side of the industry. And, interestingly enough, over 2019, as we saw a very rocky environment from a capital markets perspective, which put a large damper on investment from a lot of the big firms, these smaller privately held companies that we're working with are still investing. They feel there are opportunities on the cultivation, processing, and extraction side of the industry. They're seeing that they can set up smaller businesses with an eye of being competitive with even the largest in the industry. So I think B2B continues to be a very interesting segment for Delta 9. Other notable catalysts for us for 2019, we like to highlight for investors that we were uplisted to the main board Toronto Stock Exchange in September this year. I would consider that a very critical milestone for the company. Obviously, we're looking to improve the visibility and liquidity for our investors. And over the long term, it'll be these main board listed companies, both in Canada and the US, that are able to tap into institutional investors, which is obviously a big missing piece that we've seen in the cannabis sector so far.
Wow, thank you so much. It's good to see that you guys had that type of growth in your B2B. That's like 700% in 1 year. That's impressive. Good work.
Yeah, and I'll run through kind of the different segmentation of revenue and the growth across all of our businesses. But, I mean, we're bullish on all of these segments. We've seen significant growth across our three main business segments for this year. We've made significant investments. A lot of those projects or CapEx projects have come through to completion, and we're now seeing significant returns on that invested capital. So I think, we're always looking to highlight that Delta 9 is a company that's execution focused.
Then let's talk on that. So obviously we're in an environment right now on the financial side where obviously there's a state of significant volatility in the markets. And it's like we've seen the Dow Jones, for example, go to all-time highs a month ago of almost 30,000. Then we saw it drop to 18,000 last week. In a month, it went from all-time highs to the biggest drop in history. Yesterday, we had the biggest jump in history in the Dow Jones. Today, the Dow Jones is up another 1,000 points. So it's like a roller coaster ride. So obviously, the markets have been crazy. Now, that's the broader markets. But when it comes to the cannabis sector, it's become more and more difficult for companies to access cash. And the overall health of the balance sheet is just vital for companies in the cannabis sector right now. So can you lead us through the company's financing initiatives and how the balance sheet is shaping up at the end of this year?
Yeah, absolutely. I mean, that's the biggest question we get from a number of analysts and investors is, where is the company at from a balance sheet and cash standpoint? How safe is the company given the volatility, as you pointed to, in the market, and the difficulty in terms of accessing equity markets, obviously playing into challenges for a lot of reporting issuers right now. If we walk back to even middle of 2019, end of June, the company had about $3 million in cash, about $15 million in working capital, and obviously a number of initiatives that we've taken from there to ensure that the company is adequately capitalized. That we're able to complete all of these essential CapEx projects, that we've got a sufficient cash cushion for the company to be continuing to operate towards profitability. So in July of last year, the company completed an $11.8 million debenture financing, which gave us gross proceeds around $10.5 million, obviously top up a significant amount of cash on the balance sheet. Quick on the heels of that, into August, September, we got approval from our bank to increase our existing credit facility from $12 million to $18.1 million. So the net effect of that was to give the company access to significant additional non-dilutive capital through that credit facility. Now, I always remind investors that we are one of the few cannabis reporting issuers that has access to conventional lending facilities through a Tier 1 charter bank here in Canada, and accessing, again, non-dilutive capital at an average interest rate around 4.9%. So that's, very significant for a company, I feel, to have reached, the level of scale in our operations and our financial results, but also to be demonstrating that there are large banks that are willing to lend to this business, and that there's that credit worthiness to be working with these big financial institutions, obviously is significant. As at the end of the year, the company had used about $8.5 million of that facility, so leaving us access to about $9.5 million in additional funds under that committed credit facility. So there is still a significant amount of working capital at our fingertips that has not been accessed to date through that facility. As at the end of the year, company had about $5.8 million in cash on hand and over $22.8 million in working capital. So
Wow.
there's a lot of current assets there for the company to work through. And again, we're starting to see that combination of the increase in cash flow from operations, as well as this access to cash that the company has under our existing credit facilities. We feel that positions us very well from a liquidity standpoint, given the difficult market conditions that we see currently.
That's pretty good. 4.9% interest from a Tier 1 bank. That's impressive. Did you hear?
I know
about
it's certainly.
Did you hear
sorry,
about
go
the
ahead.
deal? Did you hear about the deal? Was it JPMorgan that just did a funding with CWeb?
I saw that. Yeah, and I think it is a significant financing to point to in the U.S. market. I mean, to start to see really the biggest banks in the world, the U.S.-based banks lending to at least the CBD side of the cannabis industry. I mean, the banks want to get into this industry. Historically, it's been more of the tier two investment banks, et cetera, that have been participating. But we are starting to see, the Bank of America's, the JPMorgans, the Morgan Stanley starting to become involved. And I think, that is what coming out of this crisis and this market correction is going to be significant for the cannabis industry in creating that next, real tranche of growth into late 2020, 2021.
Now, how did they get around with that? Because I know that they haven't passed the Safe Banking Act yet. So is it because they're CBD? Is that why they're able to do that?
Well, I believe it's because a significant portion of their CBD is derived from hemp, which the U.S. hemp regulations will allow the banks to participate. So, without really diving into the restrictions that the bank may have placed onto that, I've seen other deals where companies that have exposure to U.S. operations and assets, the banks will lend to segments of that business that only touch the legal parts. So you see companies perhaps with Canadian and U.S. operations, the bank will come in and lend to the Canadian side of the business, but with restrictions that cash cannot be used on the U.S. side. So there are some workarounds in terms of the banks and other businesses lending where there are restrictions around the U.S. Federal restrictions on cannabis.
Great. Now, I know that Delta 9 is big on providing investors with KPIs on the quarterly results. So can you lead us through the progress in Q4?
Yeah, so significant increases kind of quarter over quarter for us across a lot of these KPIs. We started to bring in these key performance indicators in Q1 2019. We want to provide investors with transparency around our results for our different business segments, kind of give them a good idea of how are we executing quarter over quarter. In terms of the fourth quarter, from a production standpoint, the company produced about 1.3 million grams. That was up about 50% from the previous quarter. And really what we've seen, that's gone from about 420,000 grams in the first quarter last year to 675,000 to 870,000 to 1.3 million. So you're just seeing that consistent quarter over quarter execution as the company's been investing, acquiring additional license capacity from Health Canada. We continue to drive those increases in production output. There's been a corresponding then decrease in our cost per gram. Obviously, we're finding efficiencies as we're ramping up production. This most recent quarter, our direct cash cost per gram was 91 cents. That was down about 15% from the previous quarter. Puts us, I believe, fourth among licensed producers in Canada for direct cash cost per gram. Our total cost per gram was about $1.04, down again about 14% from the previous quarter. So, when you consider we've reached that point of efficiencies where we are up there with some of the biggest, the best, the most efficient cannabis firms in the world on cost per gram, I think speaks to that some of the investments that we are making and have made in automation are certainly being successful. Our total grams released for sale was up slightly in the quarter. That's effectively mirroring the increase, up about 38%, the increase that we're seeing in our production output on a quarter over quarter. One misstep for us was in terms of our total grams sold was down in the quarter from the previous quarter. Our average selling price did continue to come down. I think it's really a reflection of the competitive landscape that we are seeing in the Canadian market. There's certainly an oversaturation of cannabis flower. But what we are generally guiding investors is that we feel that this fourth quarter for our grams sold, for our average selling price, and for our wholesale revenues, which I'll touch on in a moment, we feel is going to be the bottom. We feel that there will be an increase in grams sold, a slight uptick in average selling price, and an increase in our wholesale revenues. Into the first year, we've made a number of changes on our wholesale business to streamline that, get more efficient in making shipments into particularly provinces like Alberta, BC, which are large purchasing clients for us. So we're feeling that, again, there should be a general improvement from that segment into the first quarter of 2020. Our retail unit posting very strong KPIs for the fourth quarter. Once again, Huge increase in our number of grams sold. Our average selling price per gram remains above $10. We are lower than some of our industry competitors. And at the same time, we're trying to drive competition with the black market. So we do feel that's going to come down modestly as production costs are coming down, wholesale prices. There will be some room for us to maintain our margins in our retail business and at the same time get more competitive with black market, which I think is very important in terms of bringing consumers in from the pre-existing black market. Our average cart size, our number of transactions processed, again, all either consistent or improving from the previous quarter.
You know, I agree with you 100% with that comment about the black market. I've been saying this and I've been saying, guys, you know, these LPs are missing the boat. You know, like there's so much money being paid to the black market every day and people don't even want to because of the pricing. And I'm so happy to see that Village Farms finally listened and did a $99 ounce. Now, this is what I would advise to everyone, including yourself, John, and I'm sure you guys know this. Get a $100 ounce so you can compete with the black market. It doesn't have to be the best weed, obviously. It could be, we call it swag, whatever. But you need that as a low premium price black market product just to compete with the black market because people will pay for it, even if it's not that good, just to have it. Then they'll go and they'll spend the money on the higher premium products, which you currently are doing very well with because you have a $10 average per gram, which is quite high. So that's impressive that you're maintaining that price point. But what I suggest every LP should do to just get rid of the black market, have a really low priced cannabis product just to compete with the black market and then have your premium products. Now you got customers that are going to buy your low end stuff, medium price stuff, high end stuff, and the black market will be gone. It's just a matter of time because all my friends that are still in the black market are laughing and saying these LPs don't get it. We're just undercutting everybody and we're getting all the business and they're making a killing.
Yeah, no, it's a great point. And actually, we did provide some commentary in our management discussion analysis and our analyst call last week that we are working on I'll call it a value product. To be sold in a 14 and a 28 gram setting. We do expect that to launch in the second quarter this year. So, you know, we've seen the Village Farms, we've seen Hexo with Original Stash. Yes. You know, to me, I think you have to cover off that value segment. Totally. You have to have these larger packaging sizes that are, you know, frankly, for us as a retailer, that increases our average cart.
Exactly.
We will have those consumers that come in, you know, they want to get a cheap half ounce or a cheap ounce.
That's it.
And then they're going to go get 3.5 or 7 grams of some premium indoor hydroponic high potency product as well. I think it's about having that mix. And
yes,
you know, again, I would say that to our benefit as a retailer, you know, we get to see when these products are introduced into retail, you know, what is the uptake? You know, you see the Original Stash launch here in Manitoba sells out very quickly. Well, you know, then, okay, the light bulb goes off. Hey, we need to have a value brand because there is a tranche of consumers that's gravitating towards those products. So again, I think speaks to the benefit of this vertical integration strategy that we talk about, that we know what the consumers want. We get that feedback every day.
I'll give you an example. Like we had quite a few dispensaries here in Vancouver before everything started to kind of shut down. All the black market's kind of just like your neighbors now, right? They're not really in stores anymore. And all the LPs are operating out of stores. And the LPs are busy, but so is the black market. And before this change, I would walk into the dispensaries, the illegal black market dispensaries, and they would have it set up, you know, the $3-4 per gram house brand. And then they would have the $6 per gram, $8 per gram, $10 per gram, up to $25 per gram product. And you would see the guys that would drive in their BMWs and Benzes, and they would buy the $25 gram. And then you get the guys like the kids, you know, the 19, 20, 21-year-old kids that just don't have a lot of money. They're buying the house brand. And when you ask the guy behind the counter, you know, is this any good? They're like, no. They admit it. They're like, it's trash. But then it's always sold out. Always. So that's why I kept saying, and I've been saying it for 6 months. I'm glad that people are starting to listen now. You guys have to compete with the black market because $5 billion is going to the black market. $5 billion. The LPs only made $1 billion last year. So we can't leave $5 billion on the table. It just makes no sense. It's there. Because the people want to go to the LPs. They don't want to go to the black market, right? They want to know that it's lab tested, right? And I obviously understand that there's pressures because you don't want to go too cheap because you still got to make money. So I understand the pressures. But I think when you guys and everyone gets to that level, because I think it's a matter of time till everybody has a value product, because you're going to have to compete, you're going to see the black market's going to be gone. And then that extra $5 billion will be in the hands of all the LPs. And that's what I want to see, to be quite frank.
Yeah, no, and I mean, that's what we talk about in terms of getting more competitive. You start to introduce some of these missing SKUs, you start to create an environment where when folks who for whatever reason have not been participating in the legal market, maybe it was price or, they have a dealer that they've been with for years, they trust these guys, you see them then walk into a store where you have 100 different SKUs of flower and you have all the different price points and quality points. You have concentrates, you have 2.0 products, you have edibles, you have vapes, you have all the accessories, bongs, all of these things. You have that person who perhaps was not involved in the legal industry come into one of these stores, and it becomes this shopping experience that just far outweighs what the black market can provide. I think that's, more and more as the industry gets more and more competitive on the legal side, that's what's going to squeeze people into the legal market. But we've always known that this was going to be a process where, in any given year over the first 5 years of legalization, we may only take an additional 10 or 20 or 30% of the black market sales and move it into the legal market. But you look out over 5 years and we've probably moved the vast majority of those sales into the legal market versus the black market. So I think the writing's been on the wall, as you said, for the LPs. They now know we all need to get more competitive. We need to drive value. We need to bring people in who are not currently participating in the industry to continue to drive growth. But I think Canada's done a good job in creating a competitive landscape to allow for private businesses to get in and let those free market forces do what they will to drive prices down, to drive competition. All of these are good things for the cannabis sector.
Yeah, I agree. Now, on the revenue side, this was a big quarter and a big year for Delta 9. Can you lead us through the Q4 and year-end revenue and how much of this was coming from each of your three business segments?
Yeah, so from a revenue standpoint, Q4 was the biggest quarter for revenue in the company's history. Company put up about $10.6 million in top-line revenue for Q4 alone.
Nice.
Now, from a comparative standpoint, that's up over about $5.2 million the previous year, so the same year in the previous quarter, and up over $6.6 million in Q3 this year, Q3 2019. So significant growth quarter over quarter, significant growth year over year. For the full year, the company did about $31 million in top-line revenues. That's up over $7.6 million for 2018. Now, keeping in mind, this was the first full year under a legalized recreational framework, but still to see revenue increases of over 300% year over year, I think really it speaks to that the company has had this execution focus. We're now starting to see that the investments that we've made in capital assets are contributing significant revenues for the company. From a segmentation standpoint, how did our different businesses do? Well, just for the fourth quarter, we saw real strength in our retail segment, over $5 million in retail revenues for the fourth quarter. We saw real strength in our B2B segment, about $3.7 million in revenues from grow pod sales, from consulting, and other B2B activities during the quarter. So those really led the charge for us, significant growth over the previous quarters. Our wholesale business, again, we point to as a misstep, only about $1.5 million in revenue. That was down from $2.2 million in the previous quarter. Again, we're suggesting for investors that this is likely to see a rebound into the first quarter as we're seeing new improvements and efficiencies come into play on the wholesale side of our business. When we look at the full year, the full calendar year ending December 31, 2019, wholesale cannabis revenues were $9.5 million. That was up 336% over the previous year. We saw retail cannabis revenues $15.3 million, again up 390% from the previous year. We saw B2B revenues of $6.2 million, up almost 600% from the previous year. So all told, again, significant increases across these three business segments. investors, they can see that diversified revenue strategy is working, and that we're seeing growth from all of these segments.
That's spectacular. Now, how about the rest of the income statement? I believe this is the first quarter of profit from operations for the company. How does the rest of the income statement look for Q4 and the full year?
Yeah, absolutely. So, speaking from a gross profit standpoint, for the 3-month period for Q4, company did about 3.2 million in gross profit for Q4. That was 31% gross margin for the company, which we've been fairly consistent around 31 to 33% for much of the calendar year on a consolidated basis across our businesses. We do see that our wholesale cannabis business segment is running about a 35% gross margin, our B2B about 40%, so very profitable in our B2B segment, and our retail segment dragging a little bit at about a 24-25% gross margin. And I think the introduction of these 2.0 cannabis products will improve the profitability across our wholesale and our retail segments over this year. And again, as we see a rebound in our average selling price and our grams sold into Q1, we should see general improvements in profitability on our wholesale segment as well. So we will start to provide investors with a quarterly breakdown of our gross profitability, our gross margin across our business segments to really show them where we're driving gross profit across our business. Overall, gross profit for the quarter was up significantly over the previous quarter, so really driving those gains for us quarter over quarter. Gross profit for the full year was up significantly as well, about 10 million in gross profit for the full calendar year. This was before any accounting adjustments for biological assets, and that's versus 2 million in the previous year, so up almost 400% over the previous year. Significant improvements, not only in gross profit, but in gross profitability as well. Again, about 32% average for the calendar year. That was up from 27% the year before. So we're not only producing more gross profit, we're doing it with increased profitability, really driving growth for us in gross profit. From a net income loss perspective, this was the first, as you pointed to, the first operating income in the company's history. Company produced about 480,000 in income from operations for the fourth quarter. So significant milestone, obviously, for us to have that push through to profitability in the quarter. For the full year, net loss was about 2.2 million. This is down from 8.5 million in the previous year. So we'll see that we're producing significant increases in top line revenue. We're driving gross profitability. We've now narrowed that loss on a full year basis. And most notably, again, in the fourth quarter, we did turn the corner to an operating profit from operations.
That's impressive.
From an adjusted EBITDA standpoint, adjusted EBITDA loss was about 89,000 in the fourth quarter. That was down from about 900,000 in Q3. So we, again, narrowed that adjusted EBITDA loss significantly. We're now at effectively adjusted EBITDA neutral. So again, another significant milestone for the company. There's only, I believe, two LPs that have ever produced a positive adjusted EBITDA for a quarter. So to throw ourselves into being very close to that category, obviously very important for the company.
Are those Labs and Valens?
No, LPs, I was thinking Organigram and Aphria, but
Okay.
Labs and Valens obviously producing significant results. I believe our analyst from Canaccord noted that we are now fifth behind those four other companies.
Wow.
In terms of profitability in the sector. So I'll place us above Canopy and Aurora in profitability.
That's
at least
incredible. I mean, that's absolutely incredible. So overall, great fourth quarter to round out the year. Now I'll ask you about the current COVID-19 crisis in a moment. But that aside, what are the forward-looking plans for Delta 9 in 2020?
Yeah, so we don't necessarily provide formal guidance for investors in terms of revenue or earnings. That is obviously increasingly difficult given the current market environment, potential pullback in the economy, and the current health crisis. But we are trying to guide investors in terms of what to expect from Delta 9 moving forward for 2020 and into 2021. Really, the focus for us, again, we reiterate that the company has significant cash and cash reserves to weather some of the current storm. The CapEx projects have been effectively completed. But if we look at this on the sum of the parts basis, Our production and wholesale business will be able to achieve annualized production output of around 8,500 kilos per year of dried flower. Just with the current prevailing wholesale market prices, this should be wholesale revenue in the area of 25 to 30 million. Our retail business, with only 4 operating stores, should generate in excess of 20 million per year in operating revenue. And again, with growth and plans in place for increasing our number of stores over the year, both organic growth and growth through acquisition on the retail store side, and our B2B side on sales of grow pods and these construction and consulting projects, we continue to see a significant pipeline of these projects moving into 2020. So really look for the company to continue to focus on execution, producing growth across all 3 of these main business segments, really throughout 2020.
Wow, that outlook certainly looks good for Delta 9. You guys are one of the few cannabis companies in the world to reach profitability. We just talked about that. And the business is poised for growth. Now let's get into the burning situation of COVID-19. Obviously, you can't go anywhere unless you're living under a rock and not hear about COVID-19. It's affecting the entire world. I believe we're around 200 countries now infected. Just nuts, right? So kind of a weird situation. Everybody's stuck at home. How does that impact Delta 9? Are you guys still working? Are you guys shutting down facilities? Are your employees staying home? How has that affected you guys, or has it affected you at all?
Yeah, no, good questions. And this is obviously top of mind for analysts, for investors, and otherwise, is what are the impacts of this health crisis on business? So, we mentioned on the front end of the call things like our head office or our corporate head office here. We do have about 70-80% of us working from home, working satellite, but these are functions like HR, IT, supply chain. All of those can be effectively managed remote. I'm having to learn how to use Microsoft Teams and Zoom meetings and things like that. So bringing some of the technology components into our business to ensure that our management teams are still operating effectively. But at least to date, and this is changing day by day, we have seen no disruptions in our wholesale, our retail, or our B2B segments. So to date, no significant disruptions across our businesses. I think we would certainly want to highlight that we are taking this situation very seriously, that the health and safety of our staff and our customers is obviously top of mind throughout this situation. We started to look at this at Delta 9 from a management team perspective. I want to say early February. We started to do things like implementing additional sanitizer stations within our production facility, reminding our staff of good hygiene, good hand washing practices. And then from there, it's been considering the advice on almost a day-by-day basis from our provincial health authorities, from the federal health authorities, on implementing escalating precautions in terms of protecting the health and safety of our employees and customers. So, to highlight some of those factors, you'll now see in our retail stores, we are limiting the number of customers in store to about 10 at a time. We have actually seen an uptick in foot traffic and in online sales for our retail segment so far this year. So actually some improvement in our retail business, at least recently over the last 2 weeks as the situation has escalated. But as that's happening, we're having to escalate these precautions in store. We're keeping customers 6 to 8 feet apart in terms of lineups. We've closed our sensory bars, so we've limited some of the functionality in store, which would be particularly, I think, risk elements. So obviously the sensory jars where there would be direct contact or people smelling these cannabis jars, we want to eliminate any real close contact between customers and our staff. And as of this past weekend, actually, we've installed plexiglass protections within all of our stores to, again, further protect our customers from interactions with staff. So again, all of the health and safety precautions are obviously top of mind. The company has contingency plans in place for any individual store shutdowns or any limited operations for our production facilities. Obviously, we've seen even in the last day that Quebec and Ontario have deemed cannabis to be essential services. So really our goal throughout this process is to mitigate any slowdown or any stoppage of any of our business divisions. Again, we haven't seen any to date. We will continue to work tirelessly in ensuring the health and safety of our staff and customers and mitigating any risk to our businesses. But we would highlight as well that the company's current liquidity situation, our current cash flow situation places us in a pretty good position to be weathering the storm here over the next 2 to 3 months. And my goal is to have us very well positioned for coming out of that into end of 2020 and beyond with additional store openings, ramp ups in capacity on wholesale and distribution, and continuing to cultivate that pipeline of projects through our B2B segments. So really our focus is on weathering the company through this storm to begin to see significant growth as market conditions and as the economic conditions start to improve into the back half of this year.
Now, you guys have been just on fire, obviously. So has there been a downtick in sales? Has there been an uptick in sales since this has happened? Kind of, how has that affected you guys?
Well, we're seeing the news stories from across the country that we're seeing uptick in sales of cannabis products. And I'm going to go so far as to say it's not like toilet paper. Not empty shelves, but we are seeing generally, average cart size in store and online is increasing. Our average foot traffic, both in store and through online transactions, is increasing in our retail segment. So generally, there's been actually pretty positive conditions on that side. And again, then our focus becomes, if we're going to continue to operate, we have to follow the advice of the healthcare leaders in the province and the feds. Again, there's a corresponding, obviously, then demand increase for wholesale product across these provincial markets. Again, no slowdown or stoppage on the wholesale side in light of the recent events. But, we would obviously throw out the forward-looking caveats there that there may be material disruptions as a part of this. The government could force closures. I think, again, there's been those precedents set that cannabis is an essential. At the same time, if governments around the world are going to lockdowns, so the situation continues to evolve day over day. But I think relative to a lot of our peer group, Delta 9 is quite well situated to weather this storm.
I have a question for one of the members. Have they got an official government exemption as an essential service? Is this something official, or how does that work?
It's being considered province over province. Okay. So at least Ontario and Quebec, which are the first provinces to really mandate closures of all non-essential businesses, we have seen cannabis stores and cannabis production and wholesale facilities put into the essential services category. So again, I think important precedents as other provinces, Manitoba, Saskatchewan, Alberta, BC, start to consider similar closures, that cannabis has already been thrown in. And, this also plays into the medical conversation as well. Delta 9 continues to supply a few thousand patients across the country on the medical side of the business. We need to ensure that there's as little disruption as possible to these medical supply chains. So, all of that plays into the government's decision in making cannabis, and we've seen beverage alcohol be considered an essential service across these provinces as well.
I want to ask you another question. I'm going to change gears a little bit here. Now, Dan Bilzerian just did a deal with Namaste. You're familiar with that?
You know what? I'm not.
Okay, so Dan Bilzerian is like a huge Instagrammer. He's got like millions of people that follow him. He's very wealthy out of Hollywood, and he's just known to be like a party guy, I guess. And he has a cannabis company called Ignite International Brands. Symbol is Bilz, B-I-L-Z. They did a deal together with Namaste through CanMart so they can distribute their products and sell them in Canada. This is a company that's based out of the US. It's an MSO. He's got huge branding, and I think that that's going to really help the sales and generate sales through Namaste, through CanMart. And the interesting thing is because he's in America, I guess his packaging can be a little bit more aggressive, whereas with Health Canada, you can't. So my question is, would you ever consider doing something like that, like partnering with a very large celebrity name or an icon to really help build the brand recognition? Is that something you would ever look into or consider?
Yeah, I think it plays into our business's kind of incremental approach. And we've always said, the focus initially has to be on building facilities that cater to production of high quality products. So that's really the foundation is the grow pod. And the focus on high quality, high potency flower. from there, the process of brand building, again, build the proper infrastructure, produce the proper products, focus on high quality products, focus on high potency, focus on creating these SKUs on which you can build an effective brand, and then start to build a brand awareness with the consumer. It's why Delta 9 undertakes this, I'll call it corporate branding strategy, where our products are Delta 9 products, our stores are Delta 9 stores. You see the consistency and the logos, the labels, all of those components. And all of it is built around generating awareness toward the Delta 9 corporate brand. To me, then you get a little bit further down the road, you start to establish yourself as a high quality producer, a high quality brand. Well, that's where you can bring in a celebrity endorsement to really shine eyes on your brand specifically. And that's where those partnerships can be particularly effective. I think the cannabis industry, to a certain extent, has done things a little bit backwards, where we've tried to create celebrity endorsements and celebrity-oriented brands, but the product quality isn't there. And you can throw whatever celebrity endorsement you want on a product where the quality or consistency or otherwise is not there, and you won't see the success in terms of that type of branding partnership that one might want. So, I think more and more through 2020. Our focus will be on those high quality products, creating awareness for our brand. I know in the Canadian environment, it's something that Health Canada is very cautious around. They are considering on a case by case as these, existing celebrity endorsements, what they've seen. And I know from conversations from our industry group, there is a lot of concern from the government on are the existing deals with Drake and Martha Stewart, and Wiz Khalifa, and these groups, are these complying with the regulations? And in some cases, they may not be. So, this is, I think, a walk before we run. We don't want to be one of the guys that gets caught on the wrong side of the line. But, at the end of the day, if we've created a high quality product, we're bringing that to market at a price that's competitive. We're being competitive with black market, being cognizant of the consumer wants and demands from a product side. I think we'll be very well positioned to be one of those companies that can start to expand our branding and our marketing within the confines of the Health Canada restrictions and be effective on creating that brand awareness with the consumer.
That's great. I think that's a good idea. Now, the cannabis sector has been through just the last year has been really bad, right? Overall, like we're talking about the entire sector is probably down 50 to 90%. Is that fair estimate? Like depending on the company, like I see the Canadian market cap when it was at its high, it's down about 90%. So it's pretty crazy. So I think last week we found a bottom. I'm not going to ask you to predict, but do you feel like we are finally turning the corner now? You're in the industry. You obviously talk to other LPs and MSOs. Do you feel like we're finally turning the corner? Because, I mean, this roller coaster ride down, essentially, or slide down, has been really brutal for investors. And a lot of investors all over the world have told me that they've got massive losses. Now, in saying that, as an investor, when there's blood on the streets, that's the best time to buy. So we've started to see companies bounce up. We saw Tilray go down to $2 and now they're over $4. We saw MediPharm Labs, one of the companies that's more profitable than anybody else in Canada, essentially go to $1.20. Now they're back to over $2 and almost back to $2.40. So they're close to being up 100% in a week. Are these signs that we're coming out of this, or do you think this is just a dead cat bounce? Like, what's your opinion on that?
Unfortunately, I think the cannabis sector started to, I'll say, find the bottom into even January and February. We were starting to see that individual results from individual companies as those were being reported, and in the cases of the Organigram and Afria and Valens, were quite positive. Those were causing, significant lifts in their share prices. I think we were starting to see that kind of divergence of certain stocks from the HMMJ or from the industry ETFs, where the industry started to see, or investors, markets started to be paying attention to the individual results of producers, as opposed to the entire sector just trading up and down as a whole. Unfortunately, the last 3 weeks or so, in terms of the volatility of the broader market, the collapse in oil prices, and then all of the constant reporting around the health crisis and the likely recession that we're running into over the next quarter or two of pullback in economic activity, I don't know that plays well for the cannabis space. You're going to see people, selling off investments because they're seeing a loss of income or a job loss or a layoff. You're going to see people, who have pulled money out of the market in the last 3 weeks or the last 3 months. When they do start to get back in, they're likely preferring a stable dividend paying stock where the yield has gone up because share prices are coming down. So, I think we will likely still see challenges for the next number of months. I would tend to agree with you that, I think we have found a bottom where a lot of valuations have been significantly reset. But now the questions for a lot of investors who are still active in the cannabis space, I was speaking with an investor the other day. He does not have a position in Delta 9. He has a few $1 million into Kronos around, I think, $17 and above. He's really considering, do I throw another few million into Kronos, dollar cost average myself down, but with significant exposure? And, I had to pose the question to him, if you put the same amount of capital into Delta 9 at 45, 50 cents, as Delta 9 comes out of this, as you see, our execution is really outsized versus our market cap. The company now trades at just above 1 times trailing 12-month revenue. We've reached profitability, those critical milestones that the market starts to pay attention to. You consider that there are some names, and I would put Delta 9 into this category, in the small and mid cap range, that are significantly undervalued to their execution and to their financial results. I think those are the names where you will start to see a lift whenever there starts to become strength in the market. And that's where, I don't necessarily have that crystal ball to say that that's going to be 2 weeks or 6 weeks or 6 months from now. But it will happen at some point. We know that out of these economic cycles is where the significant opportunity exists for investors to get in at a level that's going to see them able to participate in the next 10-year bull run in equity markets globally. So, as you said, when there's blood in the streets, buy. Now is the time to be buying, whether that's Delta 9 or cannabis stocks or otherwise. I feel that this is a significant opportunity.
Now, you mentioned that. So this is what I've been trying to explain to people. So even though we had these huge runs in cannabis in 2017, 2018, and then before the crash, 2019, we had huge runs all 3 years. They were overvalued. We all knew this. Everything was overvalued because there was no revenue in the beginning. Now there's revenue, but then there was no profit. So this has been kind of like, the process. And now it's like, now we actually have companies with revenue and we have companies with profit, and they've still been going down. So we went from overvalued, extremely overvalued, overhyped sector, which clearly we now see is the case. And a lot of people were saying it was going to happen. But even as an investor, I didn't want to believe it. I don't think anybody really wanted to believe it. Then we saw it happen. Now we obviously believe it. Now we know that, okay, well, maybe it's kind of gone overboard, like you said. And now there's companies like yourself that are actually undervalued. I believe there's companies like Labs and Balance that I think are great buys too, that I believe are undervalued. A company like Afria, which you mentioned, I think could be undervalued. A company like Organigram, which you mentioned, I think could be considered undervalued. I think, yourself and all those companies I just mentioned, I mean, if you want to look at 5 companies, those are 5 great Canadian companies that I think are going to be here. And this could be the time to get in, guys. So at the end of the day, I can't tell you guys when to buy, and I know John's not going to do that either. But as an investor, you always want to buy low, you want to sell high. The biggest mistake that we made in 2019, myself included, was we thought when it started to go down in April, May, June, July, I got in July thinking, it's going to bounce back in the fall like every other year. That didn't happen. So if you got in July or June or August like I did, then you got killed because it just kept going lower. So that was what you called, and I agree with that, a reset. We've gone through a reset now. And then with the financial crisis that we just dealt with and the coronavirus crisis that we just dealt with and this crash, everybody was pulling money out in a panic, and cannabis stocks got affected like everybody else. But very quickly, as we're seeing here in the market's killing it again today. Cannabis stocks are killing it again today. And the market over the last 2 days, the Dow Jones is up 3,000 points. So the market is starting to rally. And we know that with the market, the way it goes is when that momentum starts, who knows where it can go, right? So hopefully we are now at the point with the cannabis sector, guys that are watching all over the world, that we may be at a bottom and you can start looking for some of these really good companies like Delta 9 to start positioning yourself. And I'm going to be honest with you, I haven't bought any shares, but I think at 40 cents, you guys are an amazing buy. And I'm probably going to buy at least 10,000 shares. So when I do that, guys, I will do a video on it and I will disclose it so everybody knows. But I just think after talking to you today, and I got my father-in-law looking at me. He's like, what pick? What pick? Just listening to everything you're talking about and the fact that you are showing profitability now and the fact that you've got money in the bank and you've got everything lined up, it just seems like you guys are set up to do extremely well. So congratulations on all your success. I think you guys are doing great. I'm really, really proud of your success. One of the youngest, if not the youngest CEOs in the entire sector to be at the level that you guys are as a company, I think is extremely impressive. And it's not an easy business. And you're holding yourself very well. So if there's anybody that's watching that has, maybe wants to learn anything more about your company, is there anywhere that you can refer them to that they can learn more? Or is there anywhere that they can contact you directly if they're interested in doing any joint ventures or business deals with you, or if they're just an investor that's interested in talking to you or getting in contact with you? What's the best way for them to reach you?
Yeah, absolutely. I mean, investors who are interested, by all means, visit our website at delta9.ca. There is an investors tab at the top where you can access our most recent investor presentations. Of course, all of our publicly available information is available on CDAR. The most recent financial statements and management discussion analysis provide an in-depth breakdown on the year-end and the quarter-over-quarter results. So we would, of course, encourage investors to go, look at those results, download the most recent investor materials. There will be a Q2 update to our investor presentation that comes out in the next week or so. So we will encourage investors to be sign up for our newsletter. We provide updates to investors. It'll give you a sense of what's going on in our stores, what products are we bringing to market, all of those activities that we're undertaking on a day-by-day basis to create value for investors. So absolutely would encourage people to visit our website, contact investor relations. We can send you materials. We can send you analyst reports from independent analysts who have done their assessment on our business model and valuation. We can provide all of this for investors who are eager to learn more. And would just finalize by saying, Rich, thank you for having me on the show, and thank you for your kind words on the company. It's always our pleasure to be on with you.
Hey, my pleasure. And is there a way that we could maybe do a facility tour one day with you?
Actually, you know what? If investors visit our website, there's about a 2-minute video that does a drone fly-through of our facility. Kind of shows you the production distribution operations, the grow pods, as well as the retail stores, kind of full company history in about 2 minutes. But I would love to schedule a time for a video walkthrough of the facility and get some eyeballs on the facility for your investors.
Yeah, I think that would be great. And keep up all the great work, John. And I'm really impressed, man. And like I said, guys, I don't own any shares right now, but when I buy shares, because I'm going to, John sold me. When I buy shares, I will let you guys know and I will fully disclose it. And I'm really, I'm looking at the price, I'm like 40 cents, like this is nuts. So yeah, I think that there's some huge upside here, guys. Personally, I think this could go to at least $1. And if it does, that's 150% on your money. I like that all day long. Thank you very much, John. Have yourself a great day, my friend, and we'll talk to you soon.
Thanks, Rich.
Okay, everybody, thank you for watching. Have yourselves a nice day.